Hey, welcome back, everyone. It is time for a Money Monday and an announcement. Today, we're going to start that $1,000 monthly challenge where I'm going to use my kids' accounts, approximately $10,000. We're going to try to generate $1,000 a month. Now, the ground rules are simple for the $1,000 monthly challenge. We're going to try to achieve $1,000 a month. It doesn't happen every single month, and that doesn't mean we use the same stock. What we're looking for is opportunities, and we might use multiple stocks. In the case of Verizon, that we're going to talk about today, for both a Money Monday and a $1,000 monthly challenge, we're going to talk about how we could use 200 shares of Verizon for this $1,000 monthly challenge because the stock is trading less than $50, and if we had $10,000, we could buy 200 shares. Now, we're going to talk about Verizon today largely because it is an opportunity for a dividend capture stock play as well. Okay, what that means is this. Verizon is about to have its dividend. We might be getting a little bit of a rally here into that dividend, just like we did last time. Okay, this, of course, is the overall stock market fall, so we're going to not look at that. We're going to look here at this recent action. And as you can see recently, it's tailed off just like the rest of the market, but it's starting to belly. It's starting to belly up and it's starting to move higher, okay? Now, where it goes, I'm not sure. It's trading for $37.55. This thing usually finds itself in this window where it'll trade 39 to 41, okay? So this would be great for a nice little covered call here, where we would buy 100 shares at $37.55. And what we're looking to do, we're looking to pick a strike price that falls right around 2 weeks after the dividend, okay? So this is where we're at. We're about 2 weeks ahead of the dividend. The dividend's going to drop right here, okay? As you can see, they're going to pay 65 cents a share. Now, Wall Street has proven they love that dividend. I mean, you could see here is the dividend drop. Here is the run-up. Here's the dividend drop, and look at that short-term rally. So they love collecting this dividend. Doesn't always happen that they get the run-up, but sometimes, like right now, I think we might be getting that little bit of a rally. Now, this thing does not trade in wide ranges, okay? So we find ourselves probably in the middle of its range. It's not at the bottom. It's clearly not at the top. We might be in that 25 percentile area still. So I like getting involved in stocks when they're in that 25 percentile. It's more likely they'll go higher than lower when we're talking about great S&P type stocks like Verizon. And with that fat dividend coming, Wall Street's going to be tempted. And that's where we're at today. So let's talk about how we play this dividend. Okay? Usually, when I'm trying to collect the dividend and I'm trying to get a covered call right where I don't have my shares taken away, I start 2 weeks before. I start looking at this trade 2 weeks before. And that's about where we're at right now. Because in some cases, that little dividend run hasn't really started yet. Or if it does happen, we still catch a little bit of an upward move. So here we are. We're 2 weeks before this dividend's going to drop. Now, what I'm going to do, so I'm going to look for a strike price that's about 2 weeks after the dividend drops. We buy the shares approximately right here. What we're hoping for is that it starts to move, but we've selected a strike price that's high enough where we will not have our shares taken away on the dividend drop. We collect the dividend, and now the stock trades. And if it finishes above, that's great. We have our shares taken away. We make max profit of both the stock move and the dividend drop. If it tails off a little bit, we keep our shares, we keep the dividend, and we look to write another 30-day covered call. The hopes is that it hasn't fallen much, so we can then write a nice at-the-money covered call, collecting max premium for our second covered call of this trade. Right? Notice the first trade is this out-of-the-money strike because we want the stock to move towards the out-of-the-money strike, but not there when we collect the dividend. Right? If the stock's at the dividend, then the call buyer might take it away from us. Okay? Now, if it continues to move higher, that's fabulous. We have our shares taken away. If it does not finish above our strike price, Hopefully, again, hopefully, it trades around 37.55. We then write the at the money strike, gaining max covered call premium, and we have our shares taken away. So that is the plan. I think for Money Monday, I'm going to do the buy the shares. We're going to do that 2 weeks before, 2 weeks after expiration. We're going to look to write the out of the money strike and potentially collect something that might equal the dividend. So the dividend's 65 cents. So what if I sold an out of the money strike that got me 65 cents? That would be a double, kind of double my dividend play. But what we're doing is we're catching a covered call with a dividend capture play. And as the stock moves, we collect the dividend, and then hopefully it gets to our strike price. We have our shares taken away. Now, the second part of this trade is if it peels off, does not finish above our strike price, it falls back to maybe 37 after the dividend's taken. Well, our very next trade is that at the money strike, maybe collecting $1.50. So think of that. The stock has not moved a nickel, yet we're collecting $1.50, $1.30, and the stock hasn't moved. This is the advantage of the selling premium strategy. Okay, so that is our Money Monday trade. I might do this trade. Now, I'll tell you now, I have 500 shares of Verizon, but I might actually add to this and write that covered call. May not use all the shares because, again, there is a likelihood my shares will be taken away. So for our $1,000 monthly challenge, this could be a really simple one. We can get about 200 shares here. We do the same strategy. We're 2 weeks into that dividend. We do the expiration 2 weeks out. We hope that it goes higher, yet not above our strike. We collect the dividend, and hopefully we have our shares taken away. If they are not, then we look to then write the covered call for next month. Okay, so that is our Money Monday and our announcement of the $1,000 monthly challenge and the stock we're looking to use. The $1,000 monthly challenge, I'm using my kids' money. So that's very important to understand. I have real skin in the game. I cannot lose money for my kids. All right, so I'm going to leave it there. If you have any questions, let me know. We're going to set up the entire $1,000 monthly challenge. I'm going to have a website that tracks all the numbers. I'm going to have trade alerts. So look to the phone app. Look at your emails. And again, you can always go to the blog post because I'll generally be posting everything there as well. Okay? Hey, look, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.